Welcome back to Investing Talk podcast. Today we're diving into Uranium Energy Corp,
Okay.
and this is based on a collection of recent reports and analyses that you sent over.
Right.
Our goal today is to really figure out what's going on with this company, what it could mean for investors like you and me. We're going to look at their stock performance,
Okay.
some key production milestones that they've hit, their overall financial health, and then what the analysts are saying about them.
Right.
And you certainly gave me a lot to work with here. Stock prices, production updates, financial documents, technical charts.
Yeah. A
So,
lot to unpack.
yeah, let's unpack this and see what the real story is here.
Yeah, the thing that jumps out to me right away is that their stock prices dipped recently.
Yeah.
At the same time, they've been making some pretty significant operational progress.
Yeah, that's a really good point.
It's
So right now their stock is sitting at $4.22,
oh.
which is down about 5%
Mm.
just recently. And TradingView is showing that it dropped about 5.5%.
Mm.
Just in the past 24 hours. And it seems like it's been on a bit of a downward trend since back in December, testing those support levels between $4.80 and $5.46.
Interesting. Despite this drop, though, the trading volume has stayed pretty high.
Huh.
Back in January, we saw over 5.8 million shares traded.
Wow.
That kind of activity, even when the price is going down, tells me there's still a lot of interest in the company.
Yeah.
Makes you wonder what's keeping people so engaged.
Yeah, it really does. Now, on the operational side of things, they had a pretty big announcement back in February.
Oh, yeah.
Uranium Energy Corp announced that they successfully drummed uranium concentrates at their Irigaray plant. Now, that sounds like a pretty major accomplishment.
Oh, definitely is. Hitting that production milestone really shows they can move past just exploration and development. Now they can actually produce at this facility. Yeah.
It's a key step towards making consistent revenue, and it shows the market that their investments are paying off.
That makes a lot of sense. And it looks like they're not just focusing on their own production, because back in January, UEC increased its stake in Anfield Energy.
Interesting. What do you think that means strategically?
Well, if you think about the bigger picture of the uranium market,
Uh-huh.
increasing their holdings in another company in the sector like Anfield
Right.
suggests that they're trying to expand and diversify.
Okay.
Maybe they're trying to get access to more resources at different geographic locations, or maybe even different technologies that could work well with theirs. It's a move that definitely has implications for their long-term growth.
Absolutely.
So we see some positive signs with their production and investments, but their stock price is still struggling a bit. To get a better understanding of this, let's take a closer look at the company itself.
Okay.
Uranium Energy Corp is a top American uranium mining company, and they specialize in these in-situ recovery projects.
Now, from what I understand, this is a more cost-effective way to extract uranium. Is that right?
Exactly. With in-situ recovery, or ISR, you inject a solution into the ground
Okay.
to dissolve the uranium, and then you pump the solution back up to the surface.
Oh, I see.
It's much less disruptive than traditional open pit or underground mining. It can also be a lot more economical.
Makes sense.
UEC is mainly using this method in Wyoming and Texas.
Okay.
They also have some assets in Canada's Athabasca Basin, which is known for its high-grade uranium deposits.
So they're in two very important regions for uranium.
Yeah.
Now, the company is considered a major up-and-coming uranium supplier globally.
Uh-huh.
Their business model isn't limited to just mining, though. They also hold physical uranium and have a big stake in Uranium Royalty Corp.
Wow, that's a pretty diverse approach.
It is.
Holding physical uranium can be a smart move.
Right.
If they think uranium prices are going to go up in the future, they can sell their inventory later at a higher price.
That's smart.
And their investment in Uranium Royalty Corp gives them a share of the profits from other uranium mining projects, without having to actually run those projects themselves.
That's really interesting.
Yeah.
Now let's look at their financial performance.
Okay.
In the second quarter of fiscal year 2025, they reported almost $50 million in revenue. That was from selling 600,000 pounds of uranium at $82.92 per pound.
Wow.
And their gross profit was $18.2 million.
Those numbers sound pretty healthy.
They do. And what's even more impressive is their balance sheet.
Oh.
They have over $214 million in liquid assets. That includes their cash equities and their uranium inventory. And get this, they have zero debt.
That is impressive.
It's a very strong financial position. It gives them a lot of flexibility to deal with market changes and pursue new opportunities.
For sure.
So when we look at their strengths, that lack of debt and the huge amount of liquid assets really stand out.
Absolutely. Having no debt is a huge advantage,
Right.
especially if the market takes a downturn. They can use that cash to invest in growth without having to worry about interest payments.
And their diversified holdings also help to reduce some of the risks that come with relying only on their own mining production.
Definitely. It's like having a safety net.
But there are some things to be cautious about, right?
No.
The volatility of their stock price, which is tied to the ups and downs of uranium prices,
Yeah, that's definitely something to keep an eye on.
is a concern, and that makes sense given how commodity markets work.
The price of uranium can be affected by all sorts of things.
Right.
Global demand for nuclear power supply disruptions and geopolitical events.
Uh-huh.
This volatility will naturally impact the stock prices of uranium mining companies.
And another concern is the potential for changes in regulations related to nuclear energy policies.
That's a big one.
Yeah, government policies on nuclear energy can really affect the demand for uranium.
Right.
Any changes in regulations, good or bad, could have a big impact on the market.
You're absolutely right.
So even though the company itself seems to be in good shape, those external factors are things investors need to watch closely.
I agree.
Now, in terms of market sentiment, it looks like analysts are feeling positive. Roth Capital recently raised their price target for UEC to $10.25.
That's a pretty big jump from where it is now.
It is. Of
Yeah.
course, analysts' price targets are just one piece of the puzzle,
Right.
but that upward revision does indicate that they see potential for the company's stock to go up.
It's also worth noting that there's a growing global focus on clean energy initiatives.
Yeah.
And that's bringing renewed interest to the uranium sector.
Right.
Nuclear power is a key part of many clean energy strategies.
It is. Now, when we look at the competition, UEC goes up against companies like Energy and Energy Fuels. So what sets UEC apart from these other players?
Well, from what we know, UEC's focus on in-situ recovery operations in the U.S.
Okay.
And their diversified holdings seem to be what make them different. That lower-cost production model with ISR could give them a real edge in terms of profit margins,
Yeah.
even if uranium prices fluctuate. And their investment in Uranium Royalty Corp adds a unique element to their business that many of their competitors who are focused solely on mining don't have.
Okay. So looking ahead, what are some of the key things that investors should be keeping an eye on?
I'd say the big things to watch are future earnings reports. Those will tell us how their production is ramping up, what their operating costs are, and how they're doing financially overall.
Makes sense.
It's also crucial to pay attention to the overall trends in the uranium market,
Right.
especially those driven by the increasing demand for clean energy.
And on the risk side, those potential changes in regulations and geopolitical events that could impact the supply and demand of uranium are still major concerns.
Absolutely. Those are the things that can shake up the entire sector. Like
Yeah.
if governments change their policies on nuclear power, or if there's some unexpected disruption to the global uranium supply chain, those could have a major impact.
They really could. Finally, let's talk about the technical analysis that was included in the materials you shared.
Okay.
It shows that the stock has been pulling back since December,
Right.
testing those support levels we talked about earlier. Key indicators like the moving averages. The 50-day moving average is currently above the 200-day moving average. But that could change, of course. And the relative strength index, or RSI, are things to keep in mind.
Yeah, those are all important signals.
The RSI might even be getting close to what's considered oversold territory.
That's right. Technical analysts use these indicators to get a sense of the momentum and potential direction of a stock's price.
Okay.
A low RSI, like we might be seeing here, could mean that the selling pressure is easing up, and we could see a price reversal.
Interesting.
But it's important to remember that technical analysis is just one tool. It can't predict the future with complete certainty. Now, the fact that the 50-day moving average is higher than the 200-day moving average is often seen as a positive sign.
Okay.
It suggests a potential upward trend. But the fact that it could change shows just how volatile things are right now.
And based on this technical picture, your analysis suggests a few different investment approaches. Holding if you're in it for the long haul, maybe buying if you think the stock will bounce back from these support levels, or selling if you think the price will drop even further.
Right.
Now, it's really important to remember that this is not financial advice.
Of course.
It's just an observation of what the technical indicators might be suggesting to some investors.
Technical analysis can offer some insights into potential trading opportunities, but you should always consider it alongside a solid understanding of the company's fundamentals and the overall market conditions.
So to sum it all up, the information you've shared paints a picture of a company with a really strong foundation, a good financial position, significant progress in production, and they're operating in a sector that has the potential to grow. However, that recent dip in their stock price and the fact that the uranium market can be so unpredictable mean that there are definitely things to watch out for.
I agree.
The technical analysis points out some important price levels and indicators that traders might be paying attention to. When you look at all of these different perspectives together, it gives you a much better understanding than just seeing a headline about a stock price change.
Definitely.
So what stands out to you the most from all of this information on Uranium Energy Corp? And what other questions do you have about the company or the uranium market in general? We hope this deep dive has given you a clearer perspective. If you found this helpful, please subscribe, like, and comment. Thanks for listening.